Good afternoon, everyone. I'm Elaine Hua.
And I'm Charlotte Wong.
We are from Berwick Secondary School, Ontario, Canada.
Today, we're excited to pitch Amazon as a compelling long-term investment opportunity with significant upside potential and limited downside risk. We will walk you through why Amazon's current valuation doesn't reflect its full potential. Amazon, which was founded in 1994, was involved far beyond e-commerce into a technology powerhouse operating across multiple high-growth industries. The company's four core businesses, e-commerce, cloud computing, digital advertising, and streaming media, delivered record revenue of 638 billion in 2024. CEO Andy Jason describes the company's recent AI push as the biggest opportunity since cloud computing in a market expected to grow nearly 36% annually. Now let's looking at Amazon's business through the BCG metrics analyzing its revenue segments. The company's key star segments drive through and profitability in high growth markets like AWS, leading cloud with 30% market share, contributing 58% of company profits and maintained the high growth. Third-party seller platform covered 63% of Amazon e-commerce sales and continues to grow. Advertising have 56 billion in revenue in 2024 with over 50% profit margins, and the rate is continuing. Cash cow segment will be an online store with steady contribution to cash flow. Question mark segment will be subscription services with future growth potential remains to be seen. Dog will be physical stores as they underperform performance and other segments. And Amazon maintains a dominant position across its key markets. The Porter's Five Forces analysis reviews low competitive threats in most areas, with customer loyalty reinforced by Prime membership and superior user experience. The company's scale creates significant leverage over suppliers, while heavy investments in logistics and technology creates nearly unshakable barriers to new entrants. Then let's go through our bullish outlook for Amazon centers on four key investment theses. Firstly, brand recognition and customer loyalty. Amazon has built a strong brand that fuels its long-term success. Ranked number three globally with 300 billion brand value in 2024, Amazon continues to gain 8% of year-over-year growth. Its Prime membership is a key driver, reaching 250 million users worldwide and 181 million in the US, which means over half of all US adults. What is more impressive, Prime is still growing at 9% annually, and Prime Video saw an 18% increase in 290 million users. This level of customer retention creates a massive competitive moat, giving Amazon a loyal customer base that readily adopts new services and ensures consistent revenue growth. And secondly, operational efficiency and cost reduction. Amazon continually improve efficiency, creating a self-reinforcing growth model that expands margins. In AWS, economies of scale and cost reduction have driven record high profitability despite growing competition. And power vertical integration with Trinium and infrared chips reduces reliance on NVIDIA, enhancing margins and strengthening Amazon's AI ecosystem. Internally, AI automation cuts admin tasks by 53%, while Kiva Robotics lowered processing cost by 20% and increased inventory ability by 50%. Logistics is also evolving. Amazon delivered 7B units in 2023 and plans global same-day delivery expansion by 2025, leveraging vision-assisted package retrieval to optimize routes and reduce costs. These improvements protect profitability while setting Amazon up for continued growth.
Third, Amazon operates in multiple high growth, high margin revenue engines that are just hitting their stride. AWS dominates cloud computing with 30% market share we talked about, generating a struggling 58% of operating income with 37% margins that continue to expand. Revenue had surged 73% in the past 3 years, and the cloud segment is perfectly positioned to capitalize the accelerating AI revolution. Digital advertising has emerged as Amazon's next profit powerhouse, reaching 50 billion for the first time in 2024 with exceptional 50% operating margin. This segment has tripled over the past 5 years and is is projected to grow another 60% by 2027, outpacing both Google and Meta. Third-party market share sales has grown to 156 billion in 2024, doubling as the percentage of net sales over the past decade. Despite implementing fee increases, sale growth remains strong, evidence of Amazon's strong pricing power. All three segments has considerable room to continue to expand on its net sales in terms of total net sale. Um, Fourth, Amazon is positioned itself at the forefront of AI revolution of 100 plus billion planned investment for 2025. This investment, primarily allocated to AI development, outpace other players. Amazon's vertical integration across AI stacks creates an edge, with Nova model just released delivering 75% lower cost than competing options. AWS Bedrock, Amazon's end-to-end AI platform, creates an emergent ecosystem with strong lock-in effects, ensuring recurring revenue growth. By positioning across the entire AI value chain, Amazon ensures it will capture that significant value from this expansion. Now let's look at Amazon's valuation through multiple approaches to validate our investment thesis. First, our DCF with three scenarios all point to significant upside potential. In our base case, with our assumption made in the box below shown, we arrive at an interesting value of 239, representing 24% upside from current levels. Our base case, we yield a target of 298, a 55% upside. Even our most conservative bear case shows a minimum downside risk of just 1.5% at 189. For our valuation multiple approach, our base case use a 20 EV/EBITDA, which is justified in this table as you see how it will gradually be adjusted over time. We have tested this with sensitivity analysis as well, applying multiple from 18 to 22, which yield a price range of the future 5 years seen in the graph, still showing substantial upside across the spectrum. Taking this a step further, we projected 5-year price range using our bear case EBITDA forecast, all anchored to a 20 multiple, falling within this range shown on the slide. This given us visibility into how stock can perform over time across different scenarios, reinforcing our confidence in our long-term upside potential, with each year showing progressively higher value in all three scenarios. Finally, we tested the impact of varying terminal growth rates at our base case DCF, even when adjusting this key variable from 7.5% to 9.5%, we consistently see significant upside potential, with target price falling within the range shown on the slide. So what is the most compelling is that of these different valuation approaches, whether it's DCF, multiplying analysis, or sensitivity testing, consistently points to the same conclusion that Amazon presents huge upside potential with minimum downside risk. This convergence supports how the store is significantly undervalued at its current level. Investment risk and mitigation. Amazon faced regulatory scrutiny with a FTC antitrust lawsuit, but outcomes are distant, and it is actively updating policies and addressing concerns. Microsoft Cloud market gains challenge Amazon, yet investment in chips and AI infrastructure helps preserve the edge. Logistics spending pressures margin, mitigated by vertical integration, automation, and a shift towards higher margin revenue streams. Amazon shows strong environmental leadership, achieving 100% renewable energy 7 years ahead of schedule and committing to a net zero carbon by 2040. The company exceeds social impact targets, training 31 million through cloud initiatives and hiring 100,000 veterans. The governance features a nearly 50-50 gender balance board with majority independent directors, earning an S&P Global high ESG ranking that outperforms industry peers. So conclusion, Amazon represents an exceptional long-term investments opportunity based on its multiple growth engine, expanding profit margins, and unmatched ecosystem. The company's current valuation doesn't reflect its true potential, creates an attractive entry point with significant upside and limited downside risk. At a time when many tech companies facing growth challenges, Amazon continues to expand into massive new markets while enhancing its existing business, demonstrating why it remains an investment for those who seek exposure to the most important technology trend of the next decade. Thank you.
觉得怎么样？